Okay, so here we go with part 2 of the Chapter 9 lecture. So this is going to have the updated problems and maybe some quick notes to update the previous edition video. Alright, so first off we're going to do the mileage deduction for employment related commuting. So we're going to do number 31, and that is on page 9-47. Okay, so Ella is the regional sales manager for a fast food chain. She starts her workday by driving from home to the regional office, works there for several hours, and then visits the 3 sales outlets in her region. Relevant mileage is as follows. Okay, so first they list the home to regional office. That will not be deductible. So remember, commuting from home to work is not deductible. So we'll ignore that one. However, the regional office to sales outlet number 1, so that would be between workstations. So we'll include that one. And that is 13 miles. Okay, and then another, so sales outlet 1 to outlet 2, that would also be between workstations. So that's 11 miles, we can include that. And then sales outlet 2 to 3, that's 9 miles, so we can include that. And then the sales outlet to home, so that would be commuting, so we wouldn't deduct that. Okay, however, just a note, a lot of businesses make a practice of like when they're calculating mileage deduction or mileage expenses, they might take the difference between the home to the normal like regional office, and then like if they have to go to another workstation, take the difference between the other workstation and the home to the normal main office. So same thing like with an audit firm going to an audit client. So if we go directly from home to the client rather than go home to the office, you could take, they'll make a practice of taking the difference between the commute to the client and then the commute to the actual firm's office. But we're just going to exclude it here and not include it. So we get a total of 33 miles a day. Okay. And so our standard mileage rate for 2013 is 56.5 cents. So 56.5 cents, we multiply those together, and that'll give us our daily mileage expense. So $18.65 per day, and then we multiply that by how many days during the year we worked. It says we worked 240 days in 2013. So that'll give us our mileage deduction for 2013, $44.75. Round to the nearest dollar. So remember, the IRS doesn't like pennies, so you round to the nearest dollar. Okay, so that was a pretty good one. Alright, so next I want to do something related to travel. And I had my eye on number 36. So on number 36, let me get there. That's on page 9-48. It says Kim works for a clothing manufacturer as a dress designer. She travels to New York City to attend 5 days of fashion shows and then spends 3 days sightseeing. her business expenses, or her expenses, are as follows. She has airfare $1,500, lodging $1,920, meals $1,440, and air transportation of $120. Alright, so it says to assume that the lodging / the meals are the same amount for business and personal, so that means we just divide by 8 days or 8 nights, and then that's the actual amount she spent per day, whether it was business or pleasure. Okay, so it says, assuming that she did not get reimbursed, how much can Kim deduct as to the trip? Okay, and so we assume that she has enough substantial support for this. Okay, so we'll do part A first. So let's see how much she gets to deduct. So we'll start with airfare, and so first we'll notice that this is domestic travel. So for domestic travel, if the trip is primarily for business, and it appears that it is because it specifically says she goes to attend fashion shows, then all of the airfare will be deductible. If it's international travel, then we allocate in that case. But since this is domestic, primary is business. Okay, and so what can complicate this is if you spend more days doing pleasure-related stuff rather than business-related stuff, then whether it's primarily for business could be questionable. However, like if your work requires you to go there and then you just take advantage by taking some vacation days while you're there, I'm pretty sure that it could still work. But now if you traveled somewhere for several months and just did a couple of days of, or several weeks and just did a couple of days of work-related stuff, then it might be kind of hard to justify that it's primarily for business. Okay, so we do the airfare, we'll do the lodging. So the basic way we're going to calculate lodging, we just take the total amount, $1,920. Since we spent the same amount every day, we divide by the total nights and multiply by the number of business-related nights. So it said we did 5 days at the fashion shows. So multiply by 5 days for the business portion, and then that should give us $720. Okay, then we go to meals. We're going to do the same thing, only we have to do one additional step for meals. So remember, meals is one of those special items that is subject to the cutback by the IRS because it's historically been abused. So even if it's business related, you can only deduct 50% of that. So we're going to take the total just like before. So for meals, we'll take the total amount spent, and since we spent the same amount per day every day, divided by the total number of days, and then multiply by the business related portion, and then multiply that by 50% for the cutback adjustment. And that gives us, drumroll, $270. Alright, anything else listed? The airport transportation. So remember, the airfare and the transportation to and from the airport for domestic will be fully deductible if it's primarily for business. $120. Alright, and I think if we add all those things up, that will give us a total of some number. $32.70. Woo! Woo! Hold on a second. I'm testing. Check 1 2 feedback. Check. Alles okay. All right. I'm sorry. I was kind of being stupid there. I was looking at the vocal level to make sure that it was recording appropriately. Okay. Next, number 40. Alright, so that was a fun one for related travel. Now, we didn't do part B, so before I go to number 40, part B, it says, okay, well, what difference would it make if she were an independent contractor rather than employee. Okay, well in that case, if she's an independent contractor, it's going to be treated as if it's her own business rather than as an employee. So here, it's going to be a from deduction on the Schedule A, and let's see. And then on B, it's going to be a for AGI deduction on Schedule C. Alright, so that would be the difference. Okay, then number 4 has to do with job-related, job search. Okay, and moving expenses, so it has to do with both of those. So let me go into the book. That is on page 9-49. 9-49. Let's see what we got. Alright, it says, upon losing his job as a plant manager, Quincy, Massachusetts, Anthony incurs $6,200 in job search expenses, having no success in finding new employment in the same type of work. Anthony moves to Clearwater, Florida, and begins a charter boat business. His expenses in connection with the move are summarized as follows. Alright, so first off, let's start with the job search expenses. So you should read somewhere in your book that that when you're incurring job search expenses, they're deductible whether or not you are successful in the search. So even though he was unsuccessful in finding a job, this $6,200 in job search expenses is deductible, but it's going to be a from AGI deduction. Okay, subject to the 2% floor. Alright, but the moving expenses are a for AGI deduction. Right, so let's go through the moving expenses and see what the deduction for AGI is. Okay. So it says he has a penalty for breaking a lease on the apartment he rented, and then he has a forfeiture of a membership in a country club. So in your book you should have read that those aren't deductible, so those don't count. So what generally counts is for transportation to the new place and moving your personal effects. One thing we specifically exclude is meals. There is a moving mileage that they give you, and in 2013 the moving mileage is 24 cents a mile. Okay, so let's start listing all this out. So we ignore the penalty and the forfeiture of the club membership and the residence. So the packing and moving charges, that definitely would count. So that is $7,100. And then the lodging during the move, that would count. The meals during the move would not count. So pack sandwiches if you plan on eating on the road. Save money because you can't write it off. If you can't write it off, it ain't worth spending, right? Okay, and then we do the mileage. Okay, and that is 2,400 miles. And in 2013 we get 24 cents a mile. So you multiply that together. Let's get a calculator out. 576. $176. So our total moving will be $8,056. Alright. That was a fun one. I say that about all the problems because they're all so much fun. Okay. So now I want to do one about education. Had my eye on number 43, and that in the printed book is on the same page as number 40, I think 9-49. Yeah, I think so. Alright, so number 43, looking at different education, independent situations. Okay, so it says, in each of the following independent situations, determine how much, if any, qualifies as a deduction for AGI under section 222. Okay, so first off, Lily is single and employed as an architect. During 2013, she spends $4,100 in tuition to attend law school. Her modified AGI is $64,000. Alright, so she's going to be able to deduct $4,000. Okay, because her modified AGI does not knock her out, does not phase her out of the tax benefit there, so her income is not too high. And Liam is single and is employed as a pharmacist. During 2013, he spends $2,400 for tuition and books, and takes a course in herbal supplements at a local university. His modified AGI is $81,000. Okay, so in that case, he's going to be able to deduct 0 because his AGI, his modified AGI, is too high. Haley is married and employed as a bookkeeper. She spends $5,200 for tuition, books, and supplies, pursuing bachelor's degree in accounting. Her modified AGI is $40,000 on the separate return she files. Okay, so she's going to get to deduct 0, and that's because she's married filing separate. Alright. So she cannot deduct as a married filing separate. Okay, and then John spends $6,500 of his savings on tuition to attend Carmine State College. John is claimed as a dependent by his parents. He's 0, so deduction not available. So this one's because that girl was married filing separate, and this one is claimed as dependent. Alright, how much, if any, of the above amounts not allowed under section 222 might otherwise qualify as a deduction from AGI? Okay, so let's go and re-examine some of these. So A would not work and C would not work. And why is that? Because Lily is doing something new. So she's an architect, an A, and she's looking at going to law school, because that would qualify her for something unrelated to what she is already doing. So she could not do anything she cannot deduct anything from AGI. And then on C, Okay, Haley employed as a bookkeeper, so if she gets a degree in accounting, that's going to qualify her for a whole range of advancement and different accounting roles. So that would not work. And B would work. So he could do both the books and tuition, but he would be subject to the 2% floor. Alright, so the other one, they had one in D. So if John is claimed as a dependent, I'm thinking he's probably not itemizing, and he's probably not gonna have, yeah, he's probably not gonna benefit from it. So, oh no, because he's going for a degree, yeah, so he wouldn't work either. So he's a candidate for a degree. All right, cool. So no on D as well. Alright, that was so cool. Now, let's see, I want to do one related to the home office deduction. So I had my eye on number 47. And 47. Oh man. 47 is on 9-50. Alright, so Melanie is employed full-time as an accountant for a national hardware chain. She also has a private consulting practice which provides tax advice and financial planning to the general public. For this purpose, she maintains an office in her home. Expenses related to her home are as follows: property tax, interest on home mortgage, and operating expenses of the home, depreciation for the business use already calculated. Alright, so they ask us what is her home office deduction. Alright, so first off, they tell us the percent of the home that's for business. So that's how we get that. They just gave us that percentage, so we'll just assume that. They base that on square footage or whatever. Okay, so all of these would work. So remember, we do them in an order. We do things that she would be able to deduct anyway first, and then other costs. Kind of like with how we did on the rentals. So first off, we've got to make sure that she has enough profit from the business to take this home office deduction. Alright. So she has income of $17,000. She has related business expenses of $5,000. Alright, so her profit is $12,000. So it looks like that's going to be a lot more than the deductions we have in front of us. The expenses. Oh, I want to sneeze. Oh Lord, chewy. Okay, the sneeze was actually a lot more powerful than that, but I just faked that to make it more pleasant and more smooth. Okay, so we look at the property taxes first. So we know that we're going to allocate the RE taxes, and we'll just take 20% because that's the business percentage of the home times 3,600. We get 720. Same thing for the mortgage interest. We will multiply the 20% business portion by the total of 3,800. We get 760. Okay. So remember, she gets to itemize those anyway. And then we'll take the operating expenses of the home. (20% multiplied by 900, and that is 180. And then they've already allocated the depreciation for us, so we don't have to multiply anything. Alright. So 3160 is the total. And that would be a from what the hell? Hold on a sec. That would be a for deduction. Okay, and then she would also get the rest of those real estate taxes and mortgage interest, so the 80% that's not business, she'd be able to deduct that as a from AGI deduction on Schedule A. The operating expenses, the other 80%, that's personal, she didn't get to deduct that. Okay. Alright, so they want us to answer a couple of other questions here. It says in part B, suppose Melanie also spent $4,000 to repaint and replace the carpet in the office. How do these additional costs change the answer to part A? Okay, so because they are only related to the home office and not the whole house, so if she only painted and recarpeted her home office area, she can deduct all of them, and they don't need to be allocated to personal and business because she's only doing something to the office, the home office area, not the entire house. Okay, so that would add, in part B, that would add an additional $4,000, which would change our total to $7,160. And then in part C, they ask us, suppose Melanie's income from consulting is only $8,000, not $17,000. How does this change the answer in part A? Well, in that case, we would have $8,000 of income minus expenses of $5,000. So we would only get $3,000 of profit to offset with the home office. So we would basically just deduct in the proper order until we run out of profit. So we'll go to the real estate taxes and mortgage interest first. So the real estate tax was $720. That gives us $22.80 for all the other stuff. And then we had mortgage interest of $760. So that gives us $15.20 left. Okay, and then the next we would deduct let's see, we would deduct operating expenses, and that gives us 60 $13.60, and then oh, you know what? That should be a 40. 1340, and then we deduct the depreciation. Alright, so that takes us 160 negative. So basically this would not be deducted. And carried over to next year, or until a year when we have enough profit. Okay, so this shouldn't really have an expiration or anything like that. So just until we have enough profit to eat it up. And that's it. Cool. Alright. See, I think I have another problem I want you to do kind of on your own. Do number 59. Or you should really just do all the problems, because you have the solutions to most of them. So number 59 is a good one to kind of review your for and from HAI deductions. But other than that, man, I am going to turn y'all loose. Enjoy.